Hi class, today I will be doing my presentation over Goldman Sachs. Goldman Sachs is a leading global banking, securities, and investment management firm that provides financial services to their clients. The company was established in 1869 by Marcus Goldman. It began as a family business, and after years of growth, the company became known worldwide. Along the way, they had to tackle many ethical issues. Over the years, Goldman Sachs became known for their culture. The integrity that was shown to their clients allowed them to build clientele quickly. Their clients trusted them, and the employees trusted the company. The employees enjoyed the teamwork and fast-paced growth. Company ethics were the key to their success in the beginning. In 1929, the stock market crash affected many companies, including Goldman Sachs. However, despite the negativity, Goldman Sachs saw an opportunity when Congress passed the Securities Act of 1933. This act was very confusing for most individuals who were not familiar with investing. Goldman Sachs decided to reduce the confusion for their clients by taking the passages of the act and explaining them in a more common language. In 1956, shares of the Ford Motor Company were being sold to the public for the first time ever. According to the Goldman Sachs Group, the company helped market 10.2 million shares. That was worth $700 million. Then, in 1982, John Weinberg led the company to London, where they took over a merchant bank. This allowed the company to expand greatly, and things finally started to look up. In 1987, Goldman Sachs took a hit from their competitors for the first time. The company began to lose clients to other firms who were known for being more aggressive with their investments. The loss in clientele caused the company to begin downsizing. Hundreds of employees were laid off. After this downfall, Goldman Sachs partnered with a bank in Japan. This partnership allowed them to get back on track towards growth. In the 1990s, Goldman Sachs saw tremendous growth. The company reported a pre-tax profit of $1.1 billion. In 1992, they paid out bonuses of 25% of annual salaries to their employees. These results could be attributed to the expansion of market overseas and the partnership with the bank in Japan. The company continued to grow by participating in many overseas investment projects. The company was thriving until 1994, when the stock market took another hit. Goldman Sachs laid off more employees, and many of the firm's veteran partners decided to retire. The partners of the firm expected to take their share of the equity with them as they pursued retirement. This caused the company to have to come up with $250 million worth of new capital. The bull market at the time on Wall Street helped stabilize the firm during these difficult times. In 1996, the company was back on track with a pre-tax profit of $565 million for the first quarter. In 1999, the company was listed on the New York Stock Exchange. In 2000, Goldman Sachs secured net earnings of $3 billion. The company was finally thriving again. Throughout the many ups and downs, Goldman Sachs had many organizational changes. The ethics of the organizations were transformed when the focus of the company moved to profits instead of focusing on having a company built on trust. When the firm decided to go public in 1999, executives were no longer being held accountable for their actions the way they once were. According to Myers 2016, this change is known as organizational drift. Conflicts of interest began to occur internally, and the impact was felt throughout the entire organization at Goldman Sachs. The company did not set out to go down this negative path, but after the stock market crashes and other downfalls, they were wanting some dramatic results immediately. They lost focus of their company ethics. Goldman Sachs chose short-term growth over long-term success. It's important for every company to always remember their ethics, the ones that they had at the beginning. It's also important to know that business is a lot like life. Failure is definitely going to happen, but you can learn from those failures and continue to grow. As Sergey Brin, a co-founder of Google, says, "The only way that you are going to have success is to have lots of failures first." Thank you.